Payment apps. All right, in this day and age, payment apps are becoming the easiest way to make payments. A payment app is a tool that links your bank account info and credit cards so you can pay for goods and services and send and receive money to and from vendors, friends, and family. Some payment apps are completely free, and some may charge fees for receiving money quicker than the standard time, or for currency exchange and processing fees, and for credit card fees. However, a drawback is that the amount of money sitting in your payment app account is not FDIC insured, thus giving the account holder potential exposure if the app goes bankrupt. In addition, payment apps can have limits on both the number of transactions you can incur per day and a limit on the amount of money that can be transferred. Now, here's the biggest takeaway regarding payment apps. In 2022, 1099-Ks will begin to be issued. Therefore, if you receive $600 or more in payments for goods and services through a third-party payment network, such as Venmo or Cash App, these payments are now being reported to the IRS, and the app user will receive a 1099-K, an informational tax form. Zelle payments are excluded as Zelle is not considered a payment app. With that being said, a payment app may ask you to provide your employer identification number, your individual tax identification number, or social security number if this information is already not on file with them. Your Form 1099-K will report the total gross income in Box 1A received during the year without considering any adjustments, discounts, or refunds. You are required to report any income listed on your Form 1099-K from your business on your income tax return. However, excludable money received can be money received from a friend as a reimbursement, money received from a roommate to pay their share of the rent, money received from a loved one as a gift, and also, if you receive money from selling a personal item at a loss, you're not required to report that amount on your tax return. For example, if you purchased a dress for $100 and sold it for $50, that amount is not taxable. But while using a payment app does not create a new tax, you must keep good records of any taxable income received and thus good record keeping. Records include accounting and payroll records, bank statements, receipts, tax forms and returns, and other business financial records. Now, if you're a business owner, it is a good idea to set up a third-party payment account for your business and keep your personal transactions separate. The IRS is now tracking all payments on your payment apps. If you ever get audited by the IRS, the burden will undoubtedly fall on you to explain that those payments are not income, so make sure you keep good records.